Right, well, let's turn now to a story that all investors are laser focused on: interest rate expectations. New Zealand's central bank announcing a bigger hike than anticipated, but saying that the peak is near. Now, this is in contrast to Australia's central bank, which paused hikes altogether. All this, of course, amid the steady rises in Europe and the US. So here with a deeper dive into the central bank policies worldwide, we have Yahoo Finance's Jennifer Schonberger. Hey, Jennifer.
Hey there, Rochelle. That's right. Australia's central bank breaking with other global central banks around the world and pausing interest rates, even as inflation remains high in Australia and around the world. Tuesday, the Reserve Bank of Australia maintained its benchmark interest rate at 3.6% after 10 consecutive increases that have seen its policy rate rise by 3.5 percentage points since last May. Though the RBA did say its pause could be temporary and there could be rate hikes resumed if price pressures intensify again. All this as neighboring New Zealand central bank surprised economists today with a 50 basis point rate hike. Australia's decision, which follows the Central Bank of Canada to hold rates, shows the divide with central banks in the US and Europe, as the Federal Reserve, Bank of England, and European Central Bank all raised rates at their last policy meetings despite broadening stress within the global banking sector. Australia more focused on avoiding a recession and taking a pause to see how its rate hikes filter through its commodity-rich economy. In fact, the RBA recently estimated that less than half of the interest rates that it has done over the past year have taken effect in the economy. It expects the remainder of that to feel the full force of its tightening in the coming months. Of course, time will tell. A debate that is ongoing. Rochelle?
Indeed. Strange times we're certainly in at the moment. Jennifer Schonberger there for us.